Look who's here, former U.S. Treasury official Michael Faulkender and Fox News contributor Liz Peek. It's great to have you both. You're the perfect experts for this show tonight. First to you, Michael, is this just the tip of the iceberg? Because I've been covering banking crises and accounting scandals since the 80s. You know, Michael, you can have all the legislation, all the regulations and regulators that you can dream up, but massive spending never papers over incompetence. This bank was incompetently run. We've got Fed rate hikes to stop inflation because of government spending. And the big debate, will the Fed keep raising rates tomorrow? Michael, are we at the leading edge of problems here?
Liz, we very well could be, because what's hitting these two banks is the rise in interest rates. It's that when they had all these deposits come in during the pandemic, they threw the money into long-term bonds. And then when inflation took off as a result of the excessive spending during the Biden administration, interest rates had to rise commensurately. The value of the bonds went way down, and so these banks became insolvent. That is not something that's unique to Silicon Valley. That's not something that's unique to cryptocurrency. That's failed basic risk management by matching the duration of your assets to the duration of your liabilities. And so if these two banks were susceptible to it, it very well could be the tip of more to come. Yeah,
Liz, they got rid of the management there. Liz, do you think they contain the chaos? Because it looks like Biden's economy is falling everywhere all at once. But first, Liz, we want your reaction to this. Biden doesn't start working until mid-morning, and he's saying he's on the stick, he's on top of it. Watch his former press secretary, Jen Psaki. Watch this.
It's important to note President Biden does nothing at 9 a.m. He is a night owl. So the fact that he is doing this at 9 a.m. anyway speaks to how vital the White House recognizes it is for him to have his voice out there, conveying that to the American public.
Do you see that utter nonsense of her trying to backpedal after realizing she just showed the world he doesn't start to work when banks failed? He doesn't start to work until after 9? How can anybody believe Jen Psaki and the Bermuda Triangle of News, MSNBC, who's politicizing this? Look at Credit Suisse. Let's show the hot boards of the regionals. They're taking hits. Credit Suisse is too. What do you think, Liz, of all this?
First of all, Joe Biden's window of productivity closes with every utterance, because there have been many stories written about how he goes to bed pretty early. So I don't know when he's working, Liz. Look, if that was meant to be a reassuring comment from our commander-in-chief, boy, did it flop. I agree with Michael. There may be more problems out there. I don't think banks are insolvent. I think they have a liquidity crisis. And yes, it's all due to higher rates. And guess what? The regulators should have been on this. They should have been watching these banks, Liz. We knew at the end of the year that banks had over $600 billion of unrealized losses and were bleeding deposits. They had more outflows last year in deposits than ever in history. Didn't anyone pay attention to this? Total mismatch of liquidity requirements and the assets they had to provide money for depositors. It was an unbelievable miss by, guess who, Janet Yellen.
And of course, when you raise rates, what Liz just described, you're going to have a crack up. When you have oceans of money flowing through the system and you still have incompetent people, right. You know, you can throw all the money you want, a Jupiter of money. It doesn't fix incompetence. You can't legislate competence. Michael, isn't this the new type of bank run that government should have their hair on fire about? You don't have to wait in line. You just pull out your bank deposits with your iPhone and Venmo it to another account. You know, critics are saying this is a huge $42 billion blitz that came out of SVB on Friday, a quarter of all its deposits. I mean, is the entire $17 trillion deposit base now on a hair trigger demanding instant liquidity, and Biden is sleeping until mid-morning?
I mean, this is exactly the problem, is that it has become so easy to move money from one institution to another that these bank runs are happening at a pace that's just unprecedented. But, you know, I really want to go back to what Liz just said and ask the very same question. Where are the regulators? This is a classic bank failure. This is the same thing that happened to the S&Ls more than 30 years ago. And where were the Biden bank regulators during this entire time period? You know, one has to ask the question, have they become so focused on climate finance and DEI, and instead of managing basic bank risk management, and they allowed this change in interest rates that was had a totally predictable effect on the bank balance sheet, allowed it to get away from themselves. This is an utter failure by the FSOC. This really calls into question the whole the whole theory behind the Dodd-Frank approach that if we just had these powerful regulators that were monitoring the store, we would never have a bank run again. You know, I really think we need to re-question the whole premise of the way we do bank regulation post-financial crisis.
That's right. So what Michael just said, Liz, pick this up. Whenever the Fed rapidly raises rates, it causes a financial shock. Like the long-term capital in 1998, dot-com bubble. You've reported about all this. 2008 crisis.
Right.
The fear is this feels like 0708, like IKB Bank in Germany when that failed, New Century Financial, Countrywide, and more. Do they know what they're doing when they're raising rates to the 5-6 range? Because 5-6% range, because people are now pulling out to chase those 5% Treasury yields. And by the way, SVB did not have a chief risk officer for 8 months last year, when it's backstopping Silicon Valley tech startups.
Well, I think that is the question. It isn't just that they raised rates, Liz. I mean, had Jay Powell moved sooner, meaning maybe 6 months into inflation increasing in 2021, he wouldn't have had to be so aggressive. He wouldn't have raised rates so violently. But every single time we've had a big rate hiking cycle, there has been a financial shock. And that's why the piece I wrote for Fox today, I mean, the regulators should have been looking out for that. Instead of, by the way, the Financial Oversight Council, which meets all the time, they were literally talking about climate change at the last meeting. I mean, this is an administration that has sort of lost its bearings. And your word, incompetent, it is the most incompetent White House I really think we've ever had. And Janet Yellen is sort of the spearhead here. I think she has a lot to answer for.
And to what Liz is saying, because we have a banking problem now and a possible tech problem with tech startups in a worse place than we realize. You know, Michael, what did Peter Thiel see when he got his fund to pull out of SVP? I mean, CFOs do not suddenly move out all deposits after a capital raise of $1.8 billion. That was a trigger, that was a fear. Oh, they need more in the secondary. I mean, SVB had more common equity in assets and liabilities. I mean, should we be watching jobless claims with the tech sector? Do we have a tech sector problem, too? What do you think, Michael?
The problem fundamentally is that the bank's assets were entirely misallocated. You have short-term claims going into funding of long-term interest rate sensitive assets, and they engaged in almost no risk management with almost no regulatory oversight of it. And so I don't think this is in any way unique to the tech sector. It has to do with a misallocation of bank capital and there being nobody watching it because they're focused on other issues.
Okay, Michael Faulkender, Liz Peek, thanks for joining us tonight.